In this video, I'm going to introduce you to a complete new way of viewing the cryptocurrency markets. And after this video, at the end of this video, you will have a complete new understanding on how you look at the price action of cryptocurrencies, but also how to predict as a trader the price range of Bitcoin and other cryptocurrencies. This is a very important course that will be completely mind blown because I'm going to take you on a journey that took for me roughly 6 years to complete. Right now I'm going to put that all into one single hour right here in this trading course. So guys, sit, relax, focus and join me on this beautiful journey where we are going to go into a very deep dimension of analysis of cryptocurrencies. Then I'm going to start right off with some crazy statistics that you probably have never heard before. Of course, you probably have heard this before. I just want to say something about this. It is a fact that roughly 5 or 10% or 5 to 10% of the active traders actually make money. And that 90% of the traders, maybe even 95% of the traders, they are losing money. So most people you are following over on the news, on social media, in the end, the majority of them is going to lose money. And in this lecture today, in this course, I'm also going to give you an insight in why that is the case. Why is it that so many people are losing money with trading and that so little people are actually gaining money with trading? And don't get me wrong, guys, your favorite influencer or other people, they can be right on a lot of things, but statistics tells us that even though they are right on a lot of things, on the majority of the times, 90 to 95% of the active traders are eventually losing money in the markets. And that includes bankers and Wall Street. That includes them. Everyone always thinks, no, Wall Street is that's where all the money is being made. That's where everyone is so profitable. Wall Street always earning. In a sense, it is kind of right. It's the investors that most of the time earning because money is flowing to the stock markets, which make the value of the stock markets go up, at least in US dollar terms. But eventually the active traders on Wall Street, they also are falling under this statistic with a 95% losing ratio. That's just important to realize, because later in this video you will learn exactly why they are losing, why such a big amount of traders are losing money. And once you understand the why, you can basically recognize that part in yourself and avoid making the mistakes that these people are making. This is a small part of the course I'm going to talk about today, because it will be very... We'll talk about a lot of things, and I will basically, like I said in the intro, I will introduce you to a new way of analyzing the markets in such a holistic way that you cannot have seen before, because it is basically not existing. There's something that I've built myself that I'm going to introduce to you in today's video. Then let's have a look at the content of this course. And first of all, guys, and that I think is very important, first I'm going to explain you who am I, because why should you listen to me? I want to create a connection with you in such a way that you resonate with me, because if you don't resonate with me and the way my perspective is on these markets, then you can probably also don't understand the tool that I've built. It is not going to be easy. That I already can say beforehand. It's not going to be easy, but it's definitely worth your time, because if you focus on something, the amount of knowledge into that something will expand completely. You're most likely headed with something in your life, maybe soccer, maybe another hobby that you have. You start on the first day, you really have to get used to everything. Maybe car driving is also a good example. But the more time you invest, the more attention and focus you invest into the subject, the more natural it becomes. Your understanding becomes suddenly so big that often you don't even have to think, or you instantly have answers to questions you never knew the answer for a couple of years ago. That's the same with this. And I'm already in that process, because I've been already here since 2016. But we will jump all into that. I'm going to talk about the problem there are basically multiple problems that are traders facing right now, and the most known problem is the emotional state. Yes, but how to solve this problem? And there are multiple problems here as well that we are going to tackle, which can definitely increase your chances of becoming a profitable trader. I'm also going to explain to you how I think, because everything that I say today, guys, is my personal opinion from my experience. I've been active in the crypto space since 2016. I've been trading already for almost 8 years right now, and I have a very concrete way of looking at the markets, which is very different than how most people are viewing the markets. But we will get to that. How do markets work? How do I think markets work? Then I'm going to share with you the secret sauce, basically a tool that I've built that can tackle all the problems that traders are facing. And I'm also going to talk about for who this basically is, for who is trading and who not. That's also very important. Little piece of mindset is very important in trading, but that we will be doing at the end of this video, because let's first check a little bit how everything resonates with you, what you think of the basically the knowledge that I'm sharing with you in today's video. First of all, guys, who am I? Well, my name is Jeroen. I am from the Netherlands. I'm born in the Netherlands, and I'm also known, or I like to call myself, Mr. Freedom. And why is that? Because I just love freedom. I love freedom. I love to go wherever I want to go, whenever I want to go. And that is exactly the reason why I started with crypto. I remember I was for an internship. I was in Bali, in Indonesia. And suddenly I met someone, and he introduced me to this Bitcoin thing. And suddenly I was completely sold, because I finally had a solution to my problem. And my problem was that I want to be location independent, earning money, so I can do basically whatever I want and get crazy beautiful experiences, meeting so many new people, meeting so many or seeing so many new places, tasting so many different cultures, all while working, right? So I don't have to be at home where I came from in the Netherlands, work for 6 months, then take 6 months off, something like that. That's also perfectly fine if you feel that that's something that fits you. Didn't fit me. I wanted to be I wanted to have that holiday feeling that I had in Holland in the summer breaks, that it's always the sun is shining, I can move freely, I can wake up whenever I want to wake up, but I also like to work hard, don't get me wrong. I like to read books, I like to do a lot of things, but I like to do them in my own pace. And that is what crypto gave me the answer to, because suddenly I realized, wow, this world of crypto, there's a lot of money to be made, life-changing amounts of money. Back then I didn't know that it was going to be so hard, because it is very difficult to take that position, to become profitable in the crypto space. But nevertheless, there are many opportunities, right? You can do trading, but there are so many other opportunities as well. So I've been trading since 2016, and I can tell you already, the first years that I've been trading, they were completely shit, and I'm still making mistakes till the day of today. Now and then still making a big loss. That's just part of the game, something that you need to accept. Yeah, I think the last years my trading game really stepped up, but the last year it really stepped up. Some of you might know me from my YouTube channel. I'm the host and owner of the YouTube channel The Blockchain Today. We have 20,000 subscribers, and the last part of the last part of 2022, the whole 2023 and the beginning of 2024, we really have been nailing it with our analysis. And that's basically because we have been focusing on building a tool that gives us complete grip on the cryptocurrency markets, which again I will introduce to you later in this video. But here you can see a picture of me on my Bitcoin bike in Bali, Indonesia, where I lived for 5 years. I could go to any country in Southeast Asia. Of course, living expenses are there also cheaper, but the quality of life is very high. The expenses is very low. Basically, if you can earn an income from a distance, so remotely, it really makes sense to be on that part of the world. Personally, if you ask me, this is part of the world that really was pulling my attention. But yeah, maybe for you can be somewhere else. Next to being a trader, I also made a very basic cryptocurrency trading course. That one you can find on the blockchaintoday.com. I sold hundreds of courses. I've got multiple emails from people who enrolled to the course, and later they sent me a message like, "Hey Jeroen, thank you so much for the course. I right now changed my profession. I'm right now working full-time in crypto," and so on. I had a lot of messages of that, which is very positive and very nice to hear as well. I predicted exactly the 2022 bottom in the Bitcoin price, also something I will be talking about later. The 2023 bull market, so the 2023 price increase of Bitcoin, I also predicted. And within my time of being an online entrepreneur, being a trader, I've also coached many people into becoming profitable traders and or help them to invest better. So it's not only about trading, it's also about investing. Then we go to the next part, which is the problem. And this is a problem that I very well know myself too. Now it comes. Why most traders fail eventually. Well, this is also something you probably have heard before. It is the emotional state of the trader that makes his decision making very blurry, his perspective very blurry. It makes his perspective biased. Therefore, this trader makes the wrong decisions because he cannot think objectively, and therefore he or she is losing money. And this is a cycle, this is a very toxic cycle that goes in. You gotta be, that's also why it's so difficult to be a profitable trader, because you gotta be really strong. You gotta be very much centered in your own body. You gotta believe in your own opinion. You gotta believe in yourself. You gotta trust your instincts. Otherwise, you can make very dramatic mistakes. And don't get me wrong, I've made them a lot. I've made so many mistakes, and I found myself so often being caught in that emotional state, and it's very difficult to get out of it. It's same as your identification, right? Some people identify as a certain person or a certain character trait, right? You cannot just quickly separate yourself from that, right? Because, for example, for me, I've been dancing my whole life. I am a dancer, or I'm a trader. Suddenly you separate yourself from a part of your identity. It's very difficult. This is also how that works in your brain with the emotional sentiment, where we'll be talking about and give you examples about this as well. But basically the process goes like this. Right, you are scrolling on the internet, you are watching the news, you are feeling your environment, because we as humans, we also have a collective consciousness which is helping to bring you in certain states. You talk to your neighbor on the street, you talk to your teacher, you talk to your colleague, maybe someone mentions Bitcoin, you start to read on the news, you start to read this, you start to read that, and suddenly you are caught up in the emotional sentiment. Maybe you are already a trader, you are already an analyst, and you're scrolling a lot on Twitter. You're scrolling a lot on YouTube, listening to other analysts. There is so much content going on nowadays. It is crazy. And if you have to take everyone very seriously, it's going to be very difficult for you to process that information. So also this is also a big problem. Consuming too much information. Sometimes you got to keep things simple as well. This brings us to the last problem, that is the lack of confidence. As a trader, you need to have confidence. When you enter a position, you have to feel confident about it. Because if you are not confident with yourself, like I said, if you are not grounded, if you are not confident, you will open a position, you go then back to consume information, maybe read the news, maybe you heard something from your environment, Telegram groups, you name it. And that will completely cloud your opinion again. It will make you doubt, did I make the right decision? Should I get out of this trade? So it all comes back to the following: that is limited or too much. So you either have too much information, or you have the wrong information. So this is basically all these problems we want to tackle. So we want to tackle for you to not get caught in the emotional sentiment. We want you, if you want to become like a very professional trader, to not consume too much information online. We will do that for you. And we want to have your confidence. That's why it's so important that you make your own decisions as a human being, as a trader. If you go to one of these VIP signals group, it's nice. You can just open Telegram. Okay, this guy says too long here, or this guy says too short here. It's possible, but you putting your responsibility in the hands of someone else. You are dependent on the quality of his analysis. So you are putting basically your money into somebody else's hands. And maybe sometime you want to make that decision. It's a calculated decision for yourself. You can do that. But what if that guy suddenly is wrong for a couple amount of times, makes mistakes, doesn't have the right analysis? Bam, he can be right a lot of times, a couple of times wrong. You end up in a loss. In this game, you really want to trust on yourself. That's why we built a tool to empower yourself. We're not doing it for you. That's very important. Nobody does something for you. You have to do it yourself. Right? If you are skateboarding and you want to learn a kickflip, right? You can look at a kickflip as many times as you want, but sooner or later you gotta do it yourself. You gotta feel it. You gotta fall sometimes, learn from mistakes, get more insights, and suddenly it's as easy as that. Similar as with driving a car. You do it, you invest your time, you invest your focus. Like I said, it's not easy and it will cost time, it will cost your energy. But once you get through that stage of investing time and energy, maybe also money, then things will get way more easier and it becomes more natural. And that is where the real value is. Because then you have suddenly a lot of answers to a lot of questions that you had before. And you can instantly answer them. There should come a time, really in the future, where you can wake up in the morning, you can open the charts of Bitcoin, let's say for Bitcoin, and you can directly, within a matter of seconds, you can tell yourself like, today the market is going to go up, today the market is going to go down, today I don't know, so I stay away. These three things you gotta be able to answer. Almost every morning. Every morning, you look at the charts, you know directly, okay, today is going to go up, today is going to go down, today I don't know. Because it's okay to don't know. We have to understand as well that there is no certainty, okay? There is no certainty. No one can predict the exact future. That brings me to the following topic, and that is, how do markets work? Well, have you ever think about that? How do markets work? How does markets work? Markets has buyers and sellers, right? So when everyone's buying, the price goes up, and when everyone's selling, the price goes down. Yeah, that's actually kind of what's happening, yeah. But there is a big but. And that's also where a lot of people make mistakes right here. When the news and when people online, or when these, maybe let's call it sentiment, when these market sentiment is very bullish, very euphoric, a lot of people think that is bullish for the price as well. Well, it's actually not, and I'm going to tell you exactly why. Very simple. Let me just go through these points, and then I'll explain to you with examples why it's not the case. When everyone is bullish, price goes up, and when everyone is bearish, the price goes down. Only buyers can become sellers, and only sellers can become buyers. Take that in mind, guys. Nobody can sell Bitcoin if he hadn't bought it before. Nobody can buy Bitcoin if he had it when he has it already bought his position. right? You can, of course, you can say, yeah, but what if he has new money? Yes, we'll come to that as well. So we have buyers that become sellers, and we have sellers that become buyers. These swing from one extreme to another extreme. These are cycles that we are seeing in the market. These cycles go in all time frames. So we have a nice example right here of the golden ratio, and you can see like this cloud with a golden ratio, right? That's the same thing as the shell. The shell or the leaf or the flower, which all have that similar pattern, is very zoomed in. This pattern is visible when you zoom in, these cycles, but when you zoom out, you can also find them. You can find the same shapes, which is emotions going from one extreme to another extreme. We go from complete euphoria to it's not gonna work out with crypto. Wow, crypto is the future. Oh no, crypto is not the future. So it's very important that you realize about these cycles, because these cycles, they appear, like I said, in shorter and longer term time frames. They just repeat. It's like a heartbeat that's going on. If you can determine the ratio between buyers and sellers, and this is where the magic lies, if you can see the ratio between buyers and sellers, that is where you can make the money. Because once you know that ratio between buyers and sellers, you can predict the most probable outcome. And once you know the most probable outcome, you can bet on the most probable outcome. And if you bet on the most probable outcome long term, you will make money. Okay, so this is basically a very simple explanation on how I think that markets work, and I'm going to show you right now with an illustration. So what we can see right here is that let's have a look at that white image first. We can see rising action, which means that the price of a certain asset is going up, right? People start buying. They buy. Price goes up. They're buying until a moment that the buying is unsustainable. So you have to view it like this. How we can make a nice example out of this. Like you can see, like, let's say you have this is maybe a good example. Let's say you have a group of 10 people. 10 people, none have bought Bitcoin, right? Suddenly one buys Bitcoin. Okay, one buys Bitcoin. The second one buys Bitcoin. Price goes a little bit up. There are some people are waking up. Hey, the price of Bitcoin goes up. Third one buys. Fourth one buys. Fifth one buys. The price goes up. Half of the 10 people, 5 people are in the market right now. They already bought. Price is already up. The other 5 people, they start to wake up to the hype. Whoa, the price goes up. Yes, we have to buy. 6, 7, 8, they buy. Maybe 2 people, they don't care. They are not interested in the stock market. So the limit is 8 people. So what do we have then? We have 10 people, which are all the market participants. 8 of them are already inside the asset, which is Bitcoin. How can the price go up? Who is going to buy to drive up the price if the 2 are not interested? Maybe the 2 even can buy. But 2 on top of the 8 that already bought is not that much also. So then we reach a turning point where we suddenly see that the price maybe goes sideways, maybe goes a little bit down. Then these 8 people that are already positioned in Bitcoin, they slowly start to doubt. One of them is like, I'm going to take some profits. And the other one, I'm also going to take out some. Then the others see that the prices are going down. And this is the emotional state. The emotional state goes from, okay. And the lower it goes, the more panic they feel. Because they are losing money. And the lower Bitcoin goes, the more panic they have, the bigger the chance that they are going to sell. Until we are then basically at a point again where the sellers who wants to sell, who were not so sure of their position, or they got also known as shaken out, because the price goes down, they panic, they sell, but you always have some people who are diehards, and they say, I will never sell. Those we call the strong hands. Those will make the next button. Once we have completed this cycle from, whoa, bullish, jump in, taking profits, whoa, get bearish, whoa, panic. Once we completed that cycle, it starts again. Because then we have the low again, and then suddenly the price goes sideways, nobody sells anymore, and everyone is outside the market can potentially buy. So what I'm trying to say is, when Joe Schmo is in Bitcoin and he has all his money in Bitcoin, or maybe a big chunk of his money in Bitcoin, he's not the buyer anymore. He's already positioned inside. So the Joe Schmo only can become a seller again. The chance is higher that he becomes a seller. So that's why you have to see, and this pattern occurs in longer term time frames. So here we can see on this image, for example, the year 2002, we go down. But as you can see, when we go down, we do go down with ups and downs, right? And when we go up, 2023, we also go up with ups and downs. So it's never a straight line. And this is the power of trading. This is where you can make the money. If you know the market conditions, the general market conditions, bull market or bear market, and you can determine the price directions in the shorter term time frame, that is where the money is made. So that is very important. But it is also very important that you have to realize that often when everyone is bullish, it can be dangerous. The price can turn even in the short term time frame. That can go on a day-to-day basis. I will show you that as well in today's lecture. I'm going to show you very clear examples of that. But that also happens on a bigger time scale. So let me show you guys. When we have a look at the Bitcoin, let's have a look at the Bitcoin top of 2017. It was a big bull market. I remember it. I was in Bali. Everyone was talking about Bitcoin. And this is also where I made one of my first big mistakes. The whole bull market of that year, 2017, the narrative was, oh yeah, the Bitcoin futures ETF. Finally, institutions are coming to the space, right? So the reason why people invest is often also emotional reasons. It's a narrative that plays in their mind. This could look like that. This could look like that. Okay, let's invest. So the moment the futures ETF launched, so the moment where actually everyone was waiting for, that should bring new money into the Bitcoin price, that should push the price to $100,000, the exact moment the Bitcoin futures ETF get approved, Bitcoin basically tops out and has a 80% correction in the course of the next 12 months, up to 2018, almost 2019. Then let's go to the next example. That was the top in 2021, where Bitcoin topped, and it's a little bit more recent, at $60,000 to $70,000. Maybe if you were in this bull market, kudos to you. We share some history together. But if you can recall, especially early in the bull market, what was the narrative? The narrative was the Plan B stock to flow model. Right, the stock to flow model of Plan B actually predicted a Bitcoin price of $100,000 at let's say the end of 2021. Right, so this is again the story again. So suddenly, me and you, depends on when you were in the markets, but I was already very early in the markets. I went all in on Bitcoin when it was $3,000 in 2018. Because that was a moment I can see, okay, this is a bottom. I'm going all in. I don't care. I just do it. I sold my car and I went all in with all the money that I had. Very happy with that. Afterwards, of course, it was a very good decision. But also because I read about the stock to flow model, it was helping me with my decision making. Wow, this model is very beautiful, has been very accurate in the past, is predicting a $100,000 Bitcoin, right? Once people get aware of this, the rumor starts going around in society, right? people get aware of it. But the moment it becomes on Yahoo Finance, Forbes, I'm talking about mainstream media, we are seeing articles, Bitcoin's remarkably accurate price prediction model, stock to flow. Even Yahoo Finance said like Bitcoin is the most undervalued in 10 years according to stock to flow model. Guys, you gotta imagine, once this hits the mainstream media news lines, all the potential buyers are already approached with the narrative to invest. So this is basically the last bang. So once this happens, we reach a turning point. Because if everyone is already positioned for the stock to flow model, if everyone is aware of it because it is mainstream media, then who's going to push the price to $100,000? Who are the new buyers if everyone already bought? So that's the whole point. So then suddenly it starts to turn around and people start to freak out. People start to panic because the people who bought very late, they are also most likely very panicking because not many are very, very confident about their position as well. They are not the strong hands. If there are only strong hands, the price would go linear up. Would just go linear without any dips. Nobody would sell because they're only strong hands. That's not how society works. We go from one extreme to another. This goes in cycles. As you can see, the green, it's cycles. But the orange as well, it is also going in bigger cycles. So when we look at the 2022 bottom, what happened there? Let's have a look at the news. One of the biggest crypto exchanges collapsed. They collapsed at the bottom. Does the price goes really much lower? No. Why? Because once this happens, once the mainstream media comes with this news, one of the biggest cryptocurrency exchanges completely crashed. Users lost their funds. Everyone is scared. Everyone leaves. Who's left? Who is left in the markets after this comes on the 8 o'clock news? Who's left? No one. But that's where the opportunity lies. Because if no one is left, only the strong hands, then we can only go up. Because if the strong hands don't sell after one of the biggest exchanges collapse, then when are they going to sell? They're not going to sell. And the strong hands are also, of course, people who know exactly how this market works. I also, again, went all in exactly at that moment. Bitcoin going to $15,000. Because I see, okay, wow, this is in timing and news. Perfect moment. Perfect. So, this is kind of like very basic stuff. If you think about it, it's very logical, but it's very difficult to explain to people because people just often don't understand it. I can try to explain this to some people that I know, and they just not open for it, or they just not see what I'm seeing. But yeah, you can let me know down below in the comment section what you think about this. But this is basically how I understand how the markets work. So another illustration right here. So here we can see that on the top of 2021, we have 80% buyers, 20% sellers. Of course, I don't know the exact numbers. I don't know about that from the total society or total market participants. I'm not pretty sure, but you can see the resemblance, right? Once the green circle is really big, you have all these buyers. They all can become sellers, and once they all become sellers, they can become buyers again. It is important to note because you see that the price action goes up, down, up, down, up, down, but still goes in an uptrend while going up and down, up and down. It is important to note that, of course, new buyers are entering as well. There are new buyers entering, but it's also important to know that if you know these metrics, if you know the ratio between buyers and sellers on the long term, but also in the shorter term, because like we said before, these patterns occur in shorter term and longer term time frames, then you can basically know the price direction. So back to the problem. Why is trading so difficult? Well, your environment often gives false signals because just like we saw, the news says Bitcoin is the most undervalued in 10 years according to stock to flow model. It is published on the day that we top, and then we have a 1-year decline. That is the emotional state. So your environment gives false signals. That is the news, that is social media, Twitter, and so on. You have limited or too much wrong information, and the limited I will explain to as well. Therefore, you have a lack of confidence because you have no oversight on what's happening. You look at the chart and you're just like, I have no clue what's going on. That is the problem that we want to solve. Then we're going to have a look at the data sets. Now it's become the more technical picture of this course. Before we are going to dive into the tool, first we are going to talk about some theoretics about the technicals, okay? Master set of data, next generation analysis. There are 3 certain ways that you can look at the markets. There are 3 data sets that you can use in order to make a price prediction. Price, structure, indicators, right? Price is the candle. The candle, for example. Structure is support and resistance levels. Indicators are momentum indicators like relative strength index, stuff like that. That is one way of viewing the markets. This is what most people use. So most traders, they basically just look at the price. And on top of the price, they put some support and resistance levels. They make patterns, triangle patterns, and so on. And they use some indicators like MACD, relative strength index, and so on. So this is the most used. The most used is the price. Then we go to the next set of data. That is live exchange data. This is already a little bit more advanced. This is basically an extra dimension to your analysis. So live exchange data, what is it? Well, it can be volume, it can be funding, it can be looking whether the price on perpetual futures is higher than on the spot market. This is a very good indicator. But all of this basically data are coming live from the exchange. So you have real-time data of the exchange. That is another basically a data set that you can use, real life data. A lot of people use funding rates. I think it's beautiful, awesome, can work pretty good. The next data set that you can use for analysis is sentiment. You have to go out, look at social media, look at the sentiment. Sentiment, I think, is very important, very much overlooked, and people already stop often right here. Most people look at the price, which means that, yeah, they can be right 50% of the times, maybe 40%. They don't look at exchange data or sentiment. So they miss already 2 dimensions of looking at the charts. Then the more professional traders, at least that I know, they include live exchange data. So you have price and live exchange data. But then they still don't look at the sentiment. I personally don't know anyone except out of the users from Whaleportal, which I'm going to introduce to you in a second, that basically combines all these 3 data sets into the analysis. Because it's very difficult. How are you going to determine the sentiment? You're going to scroll on Twitter and you are going to have a look at what some people tweet. Right? You need to, and then be careful that you don't get caught yourself in that emotional sentiment. Also another thing. Then when you look at live exchange data, what are you going to look at? You look only at funding, you look at premium, take by sell ratio. What is the stuff you're going to look at? Also very important question to ask. And of course with price, structure, how you determine support resistance levels and which indicators are you using, because there are hundreds of indicators and a lot of them are basically lagging, a lot of them are crap, and some of them are pretty good, I have to say myself. Then we go to the solution, guys, and the solution, this is something that I've built myself together with a team. I'm the founder of this platform. It's called Whaleportal. And what we basically do is we combine the price, structure, and indicators. We combine live exchange data and sentiment. These 3 data sets, we combine them into a single chart, as you can see right here. So right now, probably when you look at this chart, you're like, whoa, I see all these dots, I see all these colors, I have no clue what's going on. That's perfectly fine. Everyone has that who looks at these charts. Like I said at the beginning of this presentation, it will take time to understand what exactly is going on here. But like I said as well, once you completely understand what is going on right here, your perception of the market will get so much more depth that you will completely often understand exactly what's going to happen. At least the direction of the price, which is where traders can capitalize on. Direction is most important to know. If you know the direction, you can, like I said, you can bet on that direction and then be profitable and make money. But you can also know when not to trade. This is also very important. I'm going to share something with you. Like sometimes, this sounds maybe a little bit too extreme. This is also maybe an extreme example. Sometimes you can make 3 trades, 4 trades a year and have a 5-year salary with 4 trades. Also depends on the money that you have, of course, but you don't have to be. Some people think they have to be every single day in front of the computer, every single day, catch longs, catch shorts, catch every bottom, catch every top, always want to be in a trade. No, that's not healthy. You should not do that, in my opinion. If you feel comfortable with that and you think, hey, that is something that fits you as a person, hey, do it. You know, this is very important right here. Like, I'm not here with this course as well. I'm not here telling you what to do. No, you got to make your own decisions as a trader. I would like to see you grow as a trader. I'm just here to try and give you a tool to empower yourself. That is what I'm trying to do here. So I still think the most important person here is you. You got to make your own decisions. You got to go through your own process as becoming a profitable trader. You got to make mistakes. You got to stand up. You know, you got to get your insights. This is all about you. It's not about a VIP where you put the responsibility into somebody else. No, it's all about you and your personal development. That is what counts here. That's the most important thing. And what I'm trying to do right here, I'm trying to help empower you as a trader. Giving you insights, giving you that extra understanding, extra dimension, where you can get a better understanding and avoid mistakes and make better trading decisions. That's what I'm here for. So what we're going to do right now, we are going to go to that website and I am going to go with you through the most important indicators that this website is offering. So first of all, guys, you got to go to www.whaleportal.com. And yeah, that brings you to the following website. It is a beautifully crafted website with a lot of important data. I will go quickly with you guys over the homepage. And then we just directly jump into the Pro Charts, where I will show you exactly step by step how you can use this, basically these indicators that this website is offering for your trading strategy to tackle all of the problems that we've been mentioning earlier. And if you once you understand this exactly, you understand this process, you will be able to answer these questions like in the morning when you will wake up, whether the market goes up, down, or it is not that clear, or there's no high conviction probability into any direction. So let's just jump straight into it, okay? First of all, here on the top side, you got some blog posts. Here they explain also about certain indicators that they have. You can view more of that right here in the Learn section. Then you have a market summary. This market summary you can get basically for free just by having an account over on this website. You also can see directly the social sentiment of today. This is already a very powerful indicator, and I will show you that later in the charts as well. But this is basically crawling the internet every single day, and based on what it's reading from influencers, people on Twitter, analysts, it will make basically a summary and based on that summary, it will check whether the sentiment of people is bullish, extremely bullish, bearish, extremely bearish, maybe neutral, or slightly bearish, or slightly bullish. That's what you will see here. Then we can see the cryptocurrencies that this platform is offering. You can see it almost actually at the 10 biggest tokens roughly. Then we have the take buy sell ratio, very interesting because this actually shows you which tokens are hot takes right now. You can see on the 1 hour time frame, everyone is looking at Bitcoin. So it matters less to trade these altcoins when you see Bitcoin is going up heavily, because it means all the attention is going to Bitcoin. How this exactly works will be in a different video. I don't have time in this specific course, because this is a course with all the basics, to explain all the mechanics, how every single item works. But this, you can basically see token popularity. Traders are watching right now Bitcoin the most and Arbitrum the least. So both can have opportunities, right? Maybe short term you want to have a look at Bitcoin because everyone is now busy with Bitcoin, but maybe you also want to have a look at the altcoin that nobody is looking at, because maybe it's creating a nice setup. Then we have a Bitcoin ETF inflow. Here we can see exactly how many millions of US dollars are being flowed into these Bitcoin ETFs, exchange balance, how many Bitcoins are there on exchanges or are being withdrawn from exchanges. It's pretty low, as you can see right here. Fear and greed index, nothing that new. Now we go to the most important part, and that is the pro section right here. And guys, this might take a little bit time to completely understand, so also allow me to explain to you exactly what you are going to see right now in this chart. First of all, it looks quite similar to TradingView. We have like a chart right here's a normal candlestick chart that will load normally on the 1 minute time frame, but you can change this time frame, of course. Let's set it for now on the 4 hour time frame. You can scroll out, you can scroll into the history as well. We can even go to the daily time frame. Might make sense with what we are going to do today. Then we have indicators right here. Here you can already see there are some indicators like funding rates, Bitcoin exchange balance. So you can, for example, the Bitcoin exchange balance, you can put that indicator below the price chart right here, so you can see exactly what's happening. So right here you can see, for example, a lot of Bitcoins has been withdrawn from the exchanges. Price eventually goes up. That's normally quite a normal response, and the other way around is also when Bitcoins are being sent to exchanges. Normally people do that with the intention to sell. So these are very interesting, basically very interesting indicators. We have the premium index, also very beautiful, take buy sell ratio, volume, cumulative volume delta, but you already see a couple of ones right here, and then you can see the volume momentum index, momentum wave, sentiment index. These are the most important indicators. Okay, so I'm going to start with you. We actually going to first going to go to the overlays, because this is also very unique and this needs some more explanation. So we will first go to the overlays, where we are going into the data behind the price action, and this is a whole new dimension with analyzing the charts. Okay, but let me just quickly go through the options here. Well, so we have the overlays right here, which we will be diving in very soon. Here you can save certain charts. So when I have certain indicator on the chart, I could save it right here, give it a name, and if I want to load it, I just go here and I can load it. I can also delete it right here. In that case, you can make certain charts on certain time frames with certain indicators that you like, and when you logged into Whaleportal, you can directly bring it up. Right, you can also easily make a picture of a screenshot of the chart and send it, whatever you want to do with it, or maybe for your own administration. So we're going to start with the overlays, guys, and maybe the most important or the most easy overlay to start with is the sentiment. And we actually have sentiment. Maybe should watch sentiment. Actually, it's nice to have it first on the daily, and then we will dive into the 4 hour time frame. But we can watch sentiment in two ways. So we have sentiment like printed on the chart with these green dots, but we also can put on the sentiment index, which is a oscillator below the chart. It's for you to decide what you think is more nicer, but the sentiment is basically a computer program that is crawling the internet and is making sentiment analysis on what influencers are posting online. So what you can see here already, and this is very, very interesting, guys, is that we have here a very negative sentiment. But as I told you in the presentation earlier, when the sentiment is very negative, so the mentality of people is very negative, most people have already sold, which often is the bottom. And you can see that the lowest sentiment rate right here is the bottom, and Bitcoin just goes up. Later we will have more confirmation in this, but I want to show you some more examples of this because it's very important to understand this. So here we can also see, if we look into the shorter term time frame, it's a little bit better visible. So we have right here, we have a positive sentiment in a choppy price action, sideways range. Bitcoin just had a very massive rally, and then it's just going sideways for a range. But this is illustrating really the point that I'm making, because like I said, we have patterns, shorter term time frame, longer term time frame, even on the 1 minute time frame, you can feel these patterns. And these are these emotional cycles from extreme euphoria to extreme pessimism and so forth. And based on these emotions, people are buying and selling. And based on that buying and selling, the price goes up and down. So here we can see we have green dots, which is the sentiment is positive. Okay, that is one indication that it's more likely that the price goes down. And the price does go down. We have here a negative sentiment, price goes up. Sentiment turns more positive again, price goes down. The sentiment turns more negative again, price goes up. The sentiment turns positive again, the price comes down. Sentiment is negative again and the price goes up. Then the sentiment turns positive, price goes down. And then we can see that while the price goes down, the sentiment is becoming more and more negative. And as you can see, it was already a little bit negative right here. So it's not always a direct indicator as well. It is a indicator that we use in a basket of indicators, which I've explained in the presentation earlier, that we are going to combine live exchange data with the sentiment with the best indicators, because it's the combination of these that makes such a powerful tool. But here you can already see, generally, we spent a lot of time in a negative sentiment. Also right here on the sentiment index, we spent in the lower range right here. So the sentiment is negative, drives the price up. Sentiment is a little bit positive, price moves sideways. Sentiment is negative and the price just go up. Here, what's interesting here, guys, is that Bitcoin is in a very strong uptrend. So, of course, in certain bull markets, there can be periods where Bitcoin is going to go up even though the sentiment is bullish, right? But you always have to see everything in terms of your risk and your reward. Do you want, for example, right here, do you want to take a risk for a long-term position to the upside on the 4-hour time frame? Well, you might not want to do it, but maybe in the shorter term time frame, other signals would signal this, or other indicators would signal this rally, which I will show you later, that you can trade it still in the shorter term time frame. And here you can also see, for example, maybe when the sentiment is neutral in a very extreme bull market, when the bull market is in its full glance, the price can go up because the neutral sentiment is still relatively negative compared to an extremely bullish sentiment that normally is pretty dominant in a bull market. But if you just generally look at this data, you can really see already the power, and this is only the sentiment, where you can just see that generally when people are bullish or extremely bullish for a period of time, this is where the potential upside becomes a little bit more dangerous, right? And when people are a little bit more pessimistic for a longer term time, we have a higher likelihood for the price to go up. And guys, it's actually very interesting. That's also why it's important, why you might don't want to look too much at social media, because right here at this low, when the sentiment was very negative, you will have a lot of videos on YouTube, and Bitcoin was trading right here at 40,000 US dollars. Roughly. So a lot of people would be saying at that specific moment, Bitcoin will probably go back to 20, will probably go back to 30,000 US dollars. Eventually everyone agrees that it will go lower, or at least the majority agrees that it will go lower, which means that that majority who agrees on that has already sold the bag that they're not that sure of. So they've sold their Bitcoin in that case. So they left maybe partly, but they left the market because the emotional situation is negative, right? They think the price is going down, so they sold. Which basically means that when that happens for a period of time, it's the low. So the chances that people are entering are actually higher, like we've mentioned with the examples earlier. So negative sentiment is actually positive for the price action because there are more potential buyers. Positive sentiment, especially for longer term time frames, can be negative. So this right here, I would be careful on longing on the 4-hour time frame right here. But in the shorter term time frame, and that is the power of the other indicators that I'm going to share with you, there are still indicators that this thing is going to go up. So that brings me to the next indicator, and we get rid of the sentiment indicator because otherwise we will get too much data. At the end, we will put everything on the chart. You will get a better indication. But now we are going to work with a heat map, and this is heat map number 2. And what this heat map number 2 does, guys, is very interesting because it is taking exchange data, and it's taking a lot of different data from a lot of exchanges. So it looks, for example, how many people are in a long position, how many people are in a short position, are these people buying these long positions with a premium, or are these buying these people short positions with a premium? Do they open it with a market order? How much volume are they using? All of this exchange data, which we also mentioned earlier, live exchange data from a lot of different exchanges, is being combined in a package, which is heat map number 2. And I'm actually pretty proud on this one because I think it's a beautiful indicator because it shows exactly whenever there is buying or selling pressure. But it also, again, is very important to view the context of this data on the market conditions. Right, so let's again right now go to the daily time frame, and then we will dive into the shorter term time frames to show you exactly how this works. So generally, guys, when there is green dots below the candle, this means that there is buying pressure going on. So when it's below the candle, green, the chances that we go up is higher, and when it's above the candle, the chances is that we go lower is higher. So this is basically for the direction. So here we can see already early in the bull market we get a lot of green, so there's a lot of buying pressure, and there's not much red. There's a little bit red, but the intensity of red is very low, which means low intensity red, so not much selling pressure. So the price has a lot of space to move to the upside. And if we zoom in, then we can see the first time that we get some red dots, the price corrects until we get a green dot. Price goes up again. Then we have a sideways range with red dots basically. Price goes down till we have the green dot. Price goes up till we have the red dots again. The higher the intensity of the red, the more pressure there is from the upside. So the harder it is for potential more upside to be sustainable. Okay, if you have any questions of this, please drop them in the comment section. I will try to answer them as best to my knowledge, but this is also something that needs some experience. So you need to have a look at this. You need some time to go over this data. So here we can already see that once this price is going down after having this red intensity selling pressure, we can see that the intensity of the red decreases. And that's also a very important signal because that's showing that the selling pressure is decreasing. So you can look at it with a ball. If you have a ball of air balloon on the water, it naturally wants to push up in the bull market, right? Same as the price in the bull market. It naturally wants to go up. But then depending on the selling pressure, it will determine how high it can go or when it can go. So here we can also see the moment we have green dots, price goes up again. Then we have a period of red right here, selling pressure is coming back. We have a small correction, but you can see the intensity of the red, maybe it's even better visible in the 4-hour time frame, is decreasing. Price goes up. Then we have again a period of red, which means a period of selling pressure. When the price moves sideways for a long time, but there's only selling pressure, then eventually the price comes down until we have buying pressure again. Low intensity red, we go up. Then right here, we are in a very strong uptrend, right? So we have high intensity red and the price still consolidates higher. This is a quite a positive signal, because it means even though we have a high intensity red, so there's a lot of pressure on the price consolidates upwards. That's very bullish. So the moment, as you can see right here, the moment the intensity of the red decreases, the price goes up, until we then have the high intensity red again holding the price down, until the intensity of the red decreases again, as you can see right here. Bam, price shoots up again. Then we have again the red intensity, price comes down, and then we can see again that the intensity of the red is decreasing, and then price shoots up again. Then we have high intensity red. This intensity is also decreasing. It's not visible on the 1 day time frame, but this is visible on the shorter term time frame. So we will go to the 4 hour time frame right here, and that is this. You can see, for example, right here, we had even some buying pressure on the 4 hour time frame in this strong uptrend, but the intensity of red was very low. So in a bull market with low intensity red, the price can significantly go up. Right? In a bear market, that's not the case. If we were in a bear market, then most likely when the intensity, or when we have selling pressure, it is easier for the price to come down, because in a bear market there is not much bullish or like buying pressure, right? So the market conditions in this case is also very important, and the market conditions can also be determined by what we are seeing in the data. So when you see price going up with like these red dots, then you can be clear, okay, we are in a bull market. But if the price goes down, for example, with slightly green dots, then you can already know, like, yeah, this most likely is not a bull market anymore. At least not that strong. So that is the first warning signals. So basically, this indicator can tell you where the pressure is, but based on the historical price action, it will also tell you whether we are in a bull or in a bear market. So right here, then you can see the moment the red intensity decreases, price shoots up again until we get high intensity red again. We have high intensity red, and then you can see this is decreasing. It's decreasing, and then the price shoots up again. Right now, it's pretty intensive red. So like I said, I wouldn't be looking right here for long-term long positions, because there's too much selling pressure going on. This is, for example, way better entry, because it's all about the game of probabilities, right? So right here you might have a 70% chance of winning, and right here the price might go up. That's a possibility, but you don't have that 70% chance. So that is the risk you gotta consider for yourself, right? This tool is just helping you to calculate whether the price is going to go in the direction of your favor, in your favor or not, or how likely it is going to be, right? And what you basically want is you want to have these things lining up, because when the data is lining up and it's confirming your thesis as a trader of what you think is going to happen with the markets, you can get your profitability ratio quite high. But it also means that you don't have to trade all the time. So you want to take the trades that you're comfortable with, that you think like, hey, I'm now getting these confirmations from the data that we are going up or that we are going down. That's why I'm taking this and this action. So here we can see that the intensity red decreases, price goes up, and yeah, that is basically how the heat map works. We can also look at previous times. So we can see right here, it's pretty clear. Buying pressure, selling pressure, buying pressure, selling pressure. Right here, red intensity decreases, some buying pressure coming in, price shoots up, high intensity red, a lot of pressure, until we consolidate, and that's coming down. So that's also very interesting, that the intensity coming down. So guys, when we then overlay the sentiment data right here, which will be below the candle, so all the sentiment will be below the candle. It can be a bit confusing. That's also why we have the sentiment index right here. But here you can already see that the sentiment generally is negative, and the intensity of the red is decreasing. So that means that the selling pressure is decreasing while the opinion of people is becoming more pessimistic and more negative. That is a perfect cocktail for the price to go up, because that basically means that there's not much pressure for the price when it wants to go up, and it means that a lot of people are already on the sidelines of the markets because the emotional sentiment is very pessimistic. Then I'm going to introduce to you to another indicator on the overlays, and now we are already going into the factor of the structure. So like I've said in the presentation, we have the price, that is structure, that's indicators, because indicators are basically equations, mathematical equations on the price. So that's mainly looking at the structure. The heat map and the sentiment, it's something else. So the heat map is really taking live exchange data. Sentiment is taking live emotional data. That's how we can look at this. So if we take live emotional data, live exchange data, and the live price data, and we combine that, then we have this powerful golden triangle, however you want to call it, this powerful tool that will give you a lot of grip on the markets, but also insights in yourself, right? Because you can be here whenever, let's get rid of the heat because it's a bit confusing, but here, for example, if you are also one of these guys screaming like, okay, Bitcoin is going to 30,000 US dollars while we are at 40,000 US dollars, when you look at this chart, you can actually say to yourself like, okay, I'm now at the bear side, I'm at the negative side, I think the price goes down, but the majority thinks that right now, because I can literally see that in the data. I can see in the data that the majority thinks the price goes down. The majority is bearish. Then you can give yourself kind of a wake-up call like, hey, I'm right now in the herd mentality. I'm right. So is it true? Is it really true that I should be bearish right now? Because everyone is bearish. And then you can look at the other indicators. Okay, the red intensity decreases. Maybe I shouldn't be that bearish. And then we come to the next indicator, guys. And that is, let me then get rid of the sentiment and the heat maps to make it a little bit more, give a little bit more oversight. That is the volume momentum index right here. And later I'm going to show you the momentum waves. But this basically shows us where the momentum is in the price. And this is basically swinging from negative to positive, and it's a very beautiful calculation because it is just going from negative to positive, and you basically want to catch long positions whenever the negative is going to turn back to the positive. It depends, because sometimes you want to take the moment when it is turning positive. It really depends on the market situations, but if you would only rely on this indicator, it won't be enough, right? You need to have the rest of the indicators. But let's just go to this indicator and have a look. So for example, right here, we can also start with this on the daily time frame, and then we go into the more shorter term time frames. So if we zoom out right here, then you can see, for example, right here when this one is coming up, price eventually also coming up, but we can see we only spend a small amount of time in the green, and then we come back down. But then the moment we come back to the green, the moment we move to green, this thing goes up, the price goes up, and as long as we stay in the green, we're actually pretty bullish until we have kind of a divergence, until this one is rolling over. So once this thing is rolling over, it's just showing that the momentum, the bullish momentum, the big green bullish momentum is rolling over. It's becoming a little bit more bearish because the momentum is coming down. It's very difficult to keep the price up when the momentum is rolling over. It can happen. It happened in the extreme parts of the bull market, but it's all about, like I said, risk calculation. You don't want to be extreme long when this thing is rolling over. And you see the price comes down here too. You don't want to be extreme long when this thing is rolling over, right? Especially when this has a divergence too, because the high here is higher than this one, and here the next high is lower. That's called a divergence, and that is an opposite indicator, often showing a little bit of weakness. Can also show strength in the other way, but for this it shows weakness. Then what we can see is that we go into the negative territory, but the moment we turn positive again right here's very short amount of time, price explodes, goes up, then we go in the negative again, positive, price goes up. Then when the positive tops, comes down, price comes down again. Then we spend some time in negative, negative momentum. Then this one is going up. Then you can already see when this one is positive, the price is not really listening that much. So that already shows us that, okay, most likely it needs a little bit more time for consolidation. And then we spend some time in the in the red, and until we go into the green right here, or is it for a short time. You can see the moment this thing turns, the moment this thing goes up, the price goes up as well. And here you can see that as well, the moment we go up after a very big deep push down, we go up right here, but the price moving sideways. But you can already see that even though the price moves sideways in the background, because this is basically calculating the momentum behind the price in the background, the momentum is going up while the price moves sideways, right? And then eventually we get this huge explosive move, and here we also have a very nice small dip in the red, and the price goes up. Generally what we are seeing in the bear market, you normally see very deep and long red periods. And in the bull market, you see the opposite. The bull market is normally very long green periods and very small amounts of time in the red. Now, let's go to the short-term time frame. Let's go to the 4-hour time frame and let's have a look. Here we can see also nice, this one is coming up and the price also eventually coming up in the green. Here we have a very small dip in the red, and the moment we go green again, the moment we go green, we see nice price action. So this can all be very much confirmations, right? The moment we come up right here after being red, also we have a nice pump. Here we actually nicely coming up. Here we have some nice moments, especially as you can see when we are not that long trading in the red and it just goes back to the green. Generally that's always a very bullish, basically a bullish signal. So now you can already see that these waves already showing where the momentum is, and they can help you making the right decisions. But like I said, they are not everything. They are just a part of the equation. Then we're going to have a look at the momentum waves. And the momentum waves is, maybe you can look at them at a better version of the relative strength index if you ask me. And they also show basically where the momentum is right now. And for example, right here you can see, and I think this is a very nice example, when this one is like above the red right here, and they also have a divergence because we have a high, we have a lower high, in the price we have a higher high. When it's here, you generally don't want to open a new long position, right? That is just based on the data, because you don't know, in the end you don't know what's going to happen. But generally this data picture is not the best, because it means the sentiment is already, or the momentum is already very much overstretched to overbought conditions, right? Here on the 4-hour time frame. We even have a negative divergence. It needs at least some time to consolidate. And now it's important what happens during that time. So we see the price moving sideways right here. While the price is moving sideways, we see this momentum wave coming down. And that is also a divergence, because you can see the price is moving sideways, but this momentum wave is coming really down, which means that if this thing wants to go up again, there's a lot of space to go up. So if it comes very hard down, it means it is creating space for more bullish momentum. So once it goes up, it can go up. And here we also see that the momentum index right here is coming down. It's hovering around zero level, which can be a support level as well. But we can see the momentum wave already coming up. And then we have a small period in the red, and this thing comes up. That is a very bullish signal. Let's have a look at some more examples right here. So here we can also see, let's scroll a bit back. Here we have nice at oversold conditions, right? And the momentum index, volume momentum index is coming up. The momentum wave is coming up, kind of showing like a divergence because the price is moving sideways. So then you can already see, okay, something is going on, right? Based on the structure of the price, this actually looks pretty good. Here we also have a nice one. Kind of bullish divergence. This thing is going up, the volume momentum index is going up, price goes up. Doesn't look that significant, but this is definitely a significant move from 26,000 to 28,000. That's almost a 10% move, right? 10% move in the prices, of course, is very, very huge. Here we can also see a nice momentum waves, very low, kind of bouncing from the green line, almost having actually a divergence, because it shows a double bottom while the price is making a lower low. We can see the volume momentum index in the negative also coming up. Then these things are setting up pretty nicely. Bam, price goes up. Right, and what we can do now, and this is where everything comes together. Now we are going to combine this. We are going to combine the heat map. We are going to combine the sentiment, and you can choose for yourself whether you like to view the sentiment in as an oscillator below, or whether you like to view the sentiment as blocks on the price. But for now, I like to view it as blocks on the price, and then it will show us exactly the whole picture of the markets. And later I will show you a bonus that is the support and resistance levels. I will show you, but maybe we just overlay the sentiment when we think that when we want to confirm our thesis. I think that's a good one. So what we can see right here on the 4-hour time frame, we can see momentum waves being oversold. Okay, that's very nice. They're coming up. We can see the volume momentum index coming up as well. Red intensity decreases pretty, so we have space to go up. We even have a green dot, which means that there's some buying pressure going on. We are the bull market, so this is pretty significant, right? So this is already looking like a nice setup. Then we can still say, okay, but we want to confirm that with the sentiment. So let's get rid of the heat map. Then we want to see the sentiment, of course, negative. Right, so let's bring up the sentiment. Okay, the sentiment is negative for a period of time, confirming it also. Perfect. We can get rid of the sentiment and we can put this one, support and resistance. This is a very beautiful blue and red line showing exactly where the support and resistance is. So if you're then looking for an entry, you can just take the entry of the blue line, or take it slightly above the blue line. The blue line you gotta see as a zone. So it's a little bit above the blue line and a little bit below the red line. But as you can see, the price is basically bouncing from green till red. From blue till red, from blue till red. At red, it's the whole time resistance. And once we break that resistance, the price goes. And eventually, when we consolidate, we go back to blue a couple of times. We hit blue multiple times. So if your entry level was around the blue level, you would have cashed here the bottom. So this is basically how you can use it. So now we can overlay everything, and don't get freaked out with all the data on the chart. But now when you look at this chart, when you look at the picture, you can already say directly, like, okay, this is looking like a very beautiful buying opportunity. Very beautiful. Especially if we can enter from the blue line. Right? We didn't touch the blue line specifically. We touched it a little, we went a little bit higher than it. So that's also why I say you have to see the blue line as a zone. This you want to be your average entry. You also don't want to depend on a single level entry. You can spread your buy orders, for example, into multiple levels. Right? So when the price comes down, the lower it goes, the lower your average entry is. I think that is way smarter than just rely on one single entry. Also with exiting your trade. You want to have multiple exits. You want to take profits multiple times. So let's have a look. So for example, I think this one is very beautiful, even because this is also in the shorter term time frame. It is a very, very good indicator. So when we have a look at the shorter term time frame right here, let me just get rid of that sentiment, because that's maybe a little bit confusing right here. But here you can already see, okay, we have a high selling pressure, price come down into the blue, then the selling pressure decreases. Then we double check, what is the sentiment doing at the time? Okay, it's negative. Sentiment is negative, price can go up, right? What are the indicators saying? Okay, this one is coming down on the 1 hour time frame. That is a little bit less nice, to be honest. You would like to see something like this when it's coming up. But nevertheless, this is something that you can calculate, because you will not find situations, or often situations, where everything will line up exactly like a perfect situation. Right? They will come along, perfect situations, where you are almost sure what's going to happen. But in the end, it remains a game of probability, right? So this is very beautiful because we have the momentum wave kind of coming up, but they are not giving a strong signal. But we do see very negative sentiment and the selling pressure decreases. So based on this, just based on this data, the chances that the price moves up is higher than that the price moves down. So just based on this data, you can make a probability that the upside potential is better than the downside potential. Right here is the opposite. High selling pressure, positive sentiment. So based on this data that I'm seeing on the 1 hour time frame in this sideways consolidation, based on this data, I can already say it is more likely for the price to come down directional wise. And this is the 1 hour time frame. Take that in mind, because it can look different on a 4 hour and it can look different on a daily. You gotta work from the longer term time frames to the shorter term time frames. But then we check with the volume momentum index. Okay, it's coming up and it's coming down right here. It's coming down. The momentum waves right here have been overbought, also coming down. So they then confirm the thesis. We have a lot of selling pressure, positive sentiment. This is coming down, so the direction is, the most probable direction is going to go down. How can this help you? This can help you in two ways, guys. First of all, here at this moment, you will see a lot of YouTube videos, you will see a lot of Twitter posts, people trying to say to open long positions. They think the price of Bitcoin is going to go up. Why? Because the sentiment is positive. If they don't say that, this wouldn't be positive. So this will help you fall into that trap. Make the first mistake. Get lost in the emotional sentiment. This will already tell you, okay, I gotta be careful. Maybe I shouldn't open a long position, right? Then how can you earn with this? Do you want to open a short position? Well, the chances right here is higher that the price is going to come down. Doesn't mean necessarily that you have to open a short position. No. You can also tell yourself at least, okay, I'm not going to take a trade right now because I like in a bull market more long positions, right? So then you just wait for the price to come down. Once the price comes down, you're just looking for a better entry. So for example, right here, you then see better entries because the sentiment is very negative. We can see the selling pressure is decreasing. So this piece of price action has a higher probability to eventually turn higher. And then we can see right here, it went from 43,000 in the end all the way up to 48,000. That is a huge move. But you can also even do it a short term time frame. Enter roughly at the blue line, as you can see right here. Enter roughly at the blue line. Multiple entries goes up. Enter roughly at the red line. You can take multiple entries out. That's basically how simple it is. Right here, another one. Momentum waves, very negative, coming up. Volume momentum index coming up. What do we know? We know that the momentum went from negative, so the swing, the emotional swing in terms of momentum has been negative, so there is space to go up again. Okay, then what is the data saying? How can we combine this data? Sentiment, as you can see, is negative. So get rid of the heat map. Sentiment is negative, is confirming the thesis, right? Sentiment is negative. That's what we like to see when we think the price goes up. Then we're going to check, okay, if the sentiment is negative, what is the pressure doing? Well, if we look at the pressure, we can see that the pressure, the intensity of red is decreasing, but I'm also the one to say it's not that visible right here. Right? So, but then you have to see it in the whole picture. So we are coming down. The momentum indicators came down. They are coming up again. So we know the momentum is going up, right? We have a confirmation on both momentum waves and a volume momentum index. That's pretty nice. We have a confirmation that the sentiment is negative. Also, that confirms what we say. We have the red intensity that is decreased here than here. So here you see more bright red. Here is less bright red. So This is a doubtful one because you want to see more low intensity red. You want to see this a little bit more clear, but it doesn't, in the end, then it doesn't matter because you have still a lot of confirmations. You already have, like, it is, if this would be high, very, very high intensity red, you could say, I'm not taking the trade. But this is a doubtful one. Then you can say, okay, I'm going to take the trade. And eventually the price goes up until we have high intensity red. And as you can see, even with high intensity red, the price can go up a little bit, right? It can go up. But generally speaking, when it's high intensity red for a period of time, it is more likely for the price to come down until that red intensity decreases, that pressure decreases, as we can see right here, very clear. High intensity red, here's already decreasing, coming up, also nice. We can see it again, volume momentum coming up, momentum wave from negative into positive, touching the blue line, touching the support, so you know exactly where to enter, coming up. Then we have high intensity red, it's coming down. Right, and here we also see the red intensity decreasing. We see the volume momentum index coming up, and again right here also the momentum waves coming up. Price is going to come up until we reach overbought conditions on momentum, and that is on the volume momentum index and on the momentum waves. Let's check what the sentiment is. Sentiment is positive, right? Another confirmation, and high intensity red. 4 confirmations. Now then you wait for the price to come down. And if it doesn't come down, and if it just goes up, it's possible. I personally don't see it often, but it is possible. Because in the end, it's a game of probabilities. And this is a very important thing to understand. You have to accept the fact that you will never be able to 100% predict the future. And this is also something you should not want. You should not want that 100% accuracy of predicting the future, because that's not how the game works. Because if you try to strive to get that 100% right, you can't really lose any trade. You cannot view it in the way of probabilities. I'm going to be honest with you, it's going to be very difficult to become a profitable trader, because it will be very difficult to know when you make a mistake and to accept that mistake and to grow over that mistake. It's important to view trading as a game of probabilities, where if you use this tool, you can maximize your profitability, basically, by confirming all these different data sets. And I would also tell you that most likely you don't want to be scrolling too much on social media. I'm even saying that I have my own YouTube channel, I know, but if you just use this data, you will get better in using this data. You will understand it more. You will feel more natural with it. You don't really need other information. You can just look at this chart, and based on that, you can make decisions for that day. And you can trade Bitcoin, you can trade many other altcoins, right? You can check on the homepage which altcoin is the most hottest, which altcoins are people buying right now the most with a premium, what's happening there, you know? So you can check all of these situations on basically on all the altcoins. So you can, if you don't find a nice moment or something nice on Bitcoin, then you can also look what's going on with other altcoins. So there's always something to do, right? But sometimes, I gotta be honest, sometimes it's also good to don't make a trade. Don't make a trade is also make a decision. Is also a good decision now and then. It is also, the profitable traders are also the ones that know how and when to trade. Here we got a nice example again, guys. We have like momentum waves, very negative in the 1 hour time frame. Volume momentum index coming up, momentum waves coming up. We have negative sentiment, even becoming more negative. It's from slightly negative going to extreme negative. Okay, better. Selling pressure decreases. Bam, price goes up. Until the sentiment is bullish again, divergence on the volume momentum index, divergence on the momentum waves. We need time to consolidate. Right, we go straight sideways right here on the 1 hour time frame. Then the moment the volume momentum index comes up again, we have the momentum waves from oversold coming back up. Then we have another space. We have then negative emotions, decrease in red intensity right here, and then the price can go up. Also, when we have a look at the most recent move in Bitcoin, let's scroll to the most recent move in Bitcoin. This is a little bit more tricky because now you don't have all the confirmations. You have a little bit decrease of red intensity. So here the intensity of red is a little bit brighter than here. So that is one signal, although it's not that clear, right? The sentiment is positive, the sentiment is bullish, right? But we also know that in the bull market, sometimes with a bullish sentiment, the price can continue to go up. It's just, like I said, back to the game of probability. It's not the perfect situation, because the perfect situation would show that this would be gray or red. But that's not the case, right? But we do have the volume momentum index coming negative, coming up. With the price making lower low, volume momentum index higher low, that's bullish. We have the volume momentum, the momentum waves coming down. Not really oversold conditions, but making bullish cross right here, coming up. This can be a short-term time frame trade. If we go to the 30 minutes time frame, it might be a little bit more clear. Here you can see the waves a little bit more clear. We have that bullish divergence on the momentum waves right here, and the price goes up. But generally, if I were to look at this chart from a daily time frame, right here, and I see there's a lot of bullish sentiment and there's like selling pressure going on. Maybe it's better visible in the 4-hour time frame. Then generally I wouldn't, it's not rolling over yet. We see that this momentum index is still coming up. The momentum waves also still going up. So this on the 4-hour time frame still can go up. We haven't seen it rolling over yet. But we do see that the sentiment picture definitely changed, and the pressure is definitely coming from the top side. So what tells us that about this situation? Well, it just tells us that yes, it still can go up a little bit higher, but we're probably very late in this move. So you want to be a little bit careful. You would like to see different market conditions in order to have a more higher probability trade. So, for who is Whaleportal, and is Whaleportal something that you should use? First of all, guys, the most important thing when you are a trader, as it is with anything in life, is your belief in yourself. If you cannot believe or comprehend that you are or become a profitable trader, then it doesn't matter which tool you are going to use, you most likely won't succeed. So your own determination and your own belief into yourself might be one of the most important things. And I cannot help you with that. That is something that has to come out of you. You have to have a natural interest in trading, and most likely you have that as you have been watching this video already for some time. But your belief in yourself is very important. I go back to the kickflip on the skateboard, or the person who runs the marathon. Trading is not an easy game. We try to make it more easy to you with this powerful tool, but again, it's not an easy game because you are dealing with your own emotions, right? And the person who is determined and believes in himself, that is the person who wins. And if you don't believe you can do a kickflip, you most likely won't make it to that stage of doing it, right? So that is a very important point I want to make right here. Your belief and your mindset is very important in trading. If you have a humble mindset, you want to learn, you are willing to make mistakes, and you are willing to look at those mistakes objectively and willing to learn from them, you are a perfect character of becoming a professional trader and maybe make lots and lots of money in your career with trading. And willing to learn is also very important because it is a lot of data that you are analyzing right here on the chart. I can understand. I've built the tool together with a team. I understand exactly how it works, so I can also explain it quite easy. But I can understand for you, for the first time seeing this, it can be a little bit overwhelming, all the data and everything. So yeah, you have to be willing to learn. You have to be willing to sit in front of your laptop, to look at it objectively and see what's going on. Then guys, a very important question as well. For who is this tool not? Well, if you don't want to become a profitable trader, if you don't want to become a serious or professional trader, then of course this tool is not for you. If you are a hodler, if you just hodl Bitcoin, I would also say $45 per month and you're just hodling Bitcoin and you watch this tool maybe on when to take profits, it can be good. It can be definitely into your advantage, but you would have quite a hodl position. If your hodl position is, let's say, 1,000 US dollars, then I would say don't waste your money on this tool if you're not trading anyway, right? So it is really for the trader that wants to become even more professional, that wants to have that grip on the markets, that want to know what's going on, that wants to improve themselves as a trader. It's really for that type of person. For that person that genuinely wants it, genuinely wants to become a better trader, genuinely wants to have a career in trading, genuinely wants to improve him or herself as a trader. So it's for those persons, and it's not for people who want to make a quick buck, who think there are no risks, who are not willing to put in the time, people who are very addicted to gambling. Trading is often not that good for them. But if you are an active trader and you like this tutorial or you like this course and you see something in it, then I would definitely recommend it. Because for me personally, since I'm using Whaleportal, my decision making has been going to the next level. And I've been so much more confident in how to make decisions and making profitable decisions and being more confident when I'm positioned in a trade. And yeah, for me it's a real eye-opener and it's a real game changer in terms of my trading game. Now let's have a quick look what other people have to say about Whaleportal. We got one user right here, and this for me, guys, is the perfect example, because this person says, I went to the Whaleportal and tried to make sense of the data because he didn't understand what was going on in the markets. Then he saw for the first time clearly open interest, what has the highest levels since August, funding rates were very positive, price move up and down a little with low volume. This guy really understands it. So then eventually he actually wanted to open a long position, but because of the data he was like, hey, that is not good, I'm trapped in the emotional sentiment. Then he didn't open a long, he opened a short position because the selling pressure is inevitable, and then eventually an hour later, big movement to the downside. So, like he predicted, based on Whaleportal, guys, I love to see this because I can see the way this guy talks, he also understands how to use it. Because some people, they will go to the website, they will have no clue what's going on. That's also why I built this course. But you gotta understand the data first, because if you don't understand the data, then looking at the data, you cannot make right decisions also. So understanding the data is very important. Then we got here some other nice words from the community. Whaleportal dashboard looks amazing. Great tool for traders. Who needs TradingView when you have Pro Charts on Whaleportal? Yes, I think so too. It's definitely better than TradingView, because TradingView, again, is a beautiful charting library with many charts, many more charts than you can view on Whaleportal, but it doesn't solve the problem of all the different data sets. Whaleportal only has the price structure data, right? So if you want to have live exchange data, like really live exchange data, and you want to have sentiment combined into one chart, you cannot find that over on TradingView. You have to go to Whaleportal for that. Another one, Whaleportal dashboard looks awesome. Our community will do well in the future, and I think so too. And that's also the unique opportunity, because right now not many people are aware of this. Whaleportal, as of right now, has a little over 80 users. This is another tweet. First day of being subscribed to Whaleportal Pro, and I can tell you one thing about this: is the absolute pinnacle of trading dashboards. Great respect to the team behind this. Well, thank you very much. So guys, I hope you really learned something from this course. If things are still a little bit blurry, that's completely fine. There's a lot of data that I presented to you in today's course. Maybe you can consider watching it again. Or maybe you can consider watching only the last part from Whaleportal again, or you can watch the whole video again. I think if you watch it another time, you will even get more out of it. You will get more knowledge out of it. So yeah, guys, that was it for today's video. Thank you all for watching. True legends that you are watching till this specific moment. I hope you learned something, and I hope to see every single one of you in the next video. Bye bye.